In this video, I will be speaking about Euro USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So take a second, pause the video, read the disclaimer, and let's get right into it. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical monthly demand and support area. In fact, from here, all these previous rejections to the upside were created. Every time the market tested its zone, it rejected it to the upside quite aggressively. And what we can notice is that at the moment, the market is testing again the exact same zone and has already started rejecting it to the upside. So in a situation like this, more bullish price action could be expected, as already happened in the past when the market was testing this exact same level. So here in the monthly, everything looks quite bullish. Let's drop down on the weekly time frame and see what we have. Now, from a weekly perspective, the situation is quite clear. We went from creating weekly lower lows and lower highs. Then we had the double bottom printed exactly this zone. Now we have inverted to the creation of higher highs and higher lows. So clearly we had a perfect shift of trend from a weekly bearish market to now a weekly bullish market. The last move was the creation of this higher low. So the next logical step would be a new potential weekly higher high, so above this previous high right here. We can also notice that as we have an impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can notice how we have the 50% retracement lining up precisely with this previous resistance turned support. This creates confluence of support and demand at this zone because we have the 50% and the previous supply and resistance now turned support and demand, both lining up in the same area of price. And inside of a confluence of support zone, there is increased probability of seeing institutional longing. And we will be speaking about institutional longing in just a few moments when we move to the commitment of traders analysis. But for now, let's keep all of this in mind and drop down on the daily time frame. Now, here on the daily, I did speak about Euro USD just a few days ago when the market was around here, and I explained all the reasons for which I was expecting this rejection to the upside. I think I spoke about it here on TradingView, or it was on my YouTube channel. I don't really remember, but you can easily go and find out that previous analysis for more free education. Now, at the moment, what we can notice is that we do have bullish structure. The market has been creating also here a series of higher highs and higher lows. Now, the market is testing previous daily resistance, which is now turned support. This means that we have confluence also here of demand and support, because also here, as we have an impulse and correction, if we want to measure the correction, we can notice how the market has 50% and 0.618 Fibonacci retracements, both lining up exactly in this area, which is also previous daily resistance turned support. So basically, all this area here is a strong demand and support zone, inside of which there is the possibility of seeing more institutional longing. Now, why do I say more institutional longing? Because if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data for the euro, the first thing that we have to keep in mind is that if we are looking at the data for the euro, we're actually already looking at Euro USD, because all currencies on the spot are traded against the USD. And we can see how with the last reports, net positions have been massively increased. We went from minus 64K to plus 74K net positions. So we had a complete inversion from a negative net positioning with more shorts than longs to now a positive net positioning with more longs than shorts, making Euro USD much stronger from an institutional perspective, because now institutions are positioned much more to the bullish side for this market with more longs than shorts. So, in a situation like this, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside away from the strong demand and support zone. That definitely wouldn't surprise me. Now, if you enjoyed the video, make sure that you click on the boost button. You also find my free Telegram channel in all my platforms linked in the relevant section below the video. For any questions, let me know in the comments below. Also, any new pairs that you would like me to cover in my next videos, and I will see you in my next breakdown.